Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining and exploration space. Joining me today is Neil Adshead, consultant analyst at the Commodities Discovery Fund. Neil, welcome back to Kitco.
Thanks, Paul. Look forward to the chat.
We have a lot to get through, so let's start with lithium and Rio Tinto. Argentina's government approved Rio Tinto's Rincon lithium project in Salta under its RIGI large investment incentive regime, a taxation program. In late 2024, Rio approved a $2.5 billion of expenditure to expand Rincon to 60,000 tons per year of battery-grade lithium carbonate for 40 years. A 3,000-ton starter plant delivered its first lithium last year. Rio paid about 825 million Australian to acquire Rincon in 2021. Rio's been busy elsewhere too. Chile's state copper company Codelco chose to partner with Rio to develop the Maricunga lithium project after receiving 4 offers. Rio Tinto will contribute up to 900 million US under a partnership agreement to obtain a 49.99% stake in the project, with Codelco having the remainder. Codelco and Rio will define the roadmap for development at Maricunga, which will utilize direct lithium extraction technology, which is a solution that still isn't proven. The Maricunga deal is the latest in a string of transactions in lithium by Rio, the largest diversified miner to participate in the lithium space. Earlier this year, Rio acquired ASX-listed Arcadium Lithium for $6.7 billion, and it remains hopeful of overcoming social resistance to the Jadar lithium project in Serbia. Having led Rio down the lithium path, CEO Jakob Strasholm announced his surprise departure this week. Neil, a lot to unpack there. First, it's good to see a mining project be approved under RIGI special tax regime in Argentina. Does this suggest that the mechanism will work to stimulate mining and other investment?
Well, I think based on this example, you could say it is working. I read an article a couple of weeks ago that said I think there's 7 projects have applied so far for this, sort of accelerated, improved investment regime in Argentina from the federal government. So it's very encouraging for people who are operating in Argentina, hoping to get a mine going, because it's been a bit of a wasteland for new mine developments over in recent years. But under the Milei government, giving credit here to trying to attract inward investment into the major mining projects of the country. So now that one's gone, so to speak, one's now through this sort of hurdle. Hopefully, some of the others will follow suit. And I believe, from memory, there was maybe 4 or 5 of those were big lithium projects, and there was a couple of I think there's a couple of copper projects in there too. So yeah, it's going to be fascinating to follow what happens on other RIGI applications in Argentina through the rest of 2025.
As you say, President Milei is making very big push to right-size Argentina's economy. He's taken down currency controls, and other news this week is allowing people, he's asking the tax authority to ease up on getting people to justify where every dollar comes from and where every dollar is spent. His aim there is to get some of the US dollars stuffed under the mattress back in circulation. Rio Tinto has bet big on lithium, while other major miners avoiding it. On the one hand, I suppose it's good to be the main player in the game, but there's always the possibility, lithium after all is a relatively low volume business, there's always the possibility that Rio is in the wrong game. What are your thoughts, Neil?
Yeah, it's a low volume business today, and I don't think you're ever going to be able to call lithium a bulk commodity. But the projects can have these sort of multi-decade lives, and I'm assuming Rio is obviously, there's partly a marketing angle here. They can say they're developing raw materials for the sort of electrification of everything business plan going forward. And I suppose they have to develop some new businesses, and diversification for these big majors is a key thing. So Rio's gone down the lithium route, and good luck to them. We've seen BHP there with the potash in Saskatchewan, and previously they went after the sort of shale, the oil shale, the shale gas in the United States. So we've seen this before. I can see why Rio's gone down this route. Will it work out for them? I don't think anyone should try and forecast metal prices and metal markets 10 years out, but only the future will tell. But I suppose from lithium perspective, so far, there isn't really a substitute for lithium. So that's, I suppose, in terms of that old moat concept, I suppose lithium is not a bad commodity to get into, because I think we'll be having lithium used in batteries in 50 years' time.
Well, BHP CEO Brian Hedgery said a couple of years ago that BHP has no interest in getting into the lithium space purely because it can't bring its scale benefits, advantages to bear in the space. Now, as you mentioned, or we've mentioned, lithium is a relatively low volume business. So will the presence of a major with so many projects or in so many projects, will that be a category killer and potentially crush pricing and the prospects of smaller companies in the space?
Potentially, yeah, because if they get the project big enough and the margins are good enough, they will kind of crush the smaller guys. As we've seen, I've been through a couple of cycles now, and I've seen phosphate often touted as a hot commodity because of the fertilizer angle, and every time the juniors try and get a project going, they tend to get crushed on the margins by the Moroccans, who sort of control the market. So potentially yes. But for now, there's still a lot of life in the lithium sector. There's quite a few decent looking projects. Ultimately, it's going to come down to how much supply comes on and how well that keeps up with the demand growth. Again, it's pretty hard at predicting what that's going to be like at the end of the year, never mind the end of the decade or into the next decade.
Now, Rio's CEO, Jakob Stausholm, he's taken Rio down this lithium strategy, and now suddenly he resigns. What should we read into this? And what will the potential future CEO of the company, could that potentially take it in a different direction? I'm mindful here of, it is quite common for CEOs to come in and want to stamp their position, their vision on a company. We can think back to Cynthia Carolyn, how she effected quite a drastic change when she took over at Anglo American a few years ago. What should we read into Stausholm resigning?
Well, it's impossible to know why he resigned. If you're a fly on the wall inside the boardroom, maybe you'd understand the sort of the interrelationships between the CEO and his executives and the board. Again, I'm not even going to try and speculate. I've never met the individual. I don't know anything about him. But I suppose one thing is that the strategy of a company is obviously the CEO is involved in setting it, but the board plays a key role in that. And we're losing the executive here. It sounds like he's resigned. Whether that was his own choice or whether he was pushed, again, we don't know. But I believe the board is the same. That suggests to me the company's strategy will not change. So I don't see Rio deviating from this apparent growth push they're doing in the hard rock lithium space, hard rock lithium and lithium brines too.
Okay, next up, M&A. Leading silver company Pan American Silver agreed to buy Mag Silver for $2.1 billion in a cash and stock deal, which will add the 44% joint venture interest in the Juanicipio mine, operated by Fresnillo, which is in Zacatecas in Mexico. A premium of 21 to 27% there for the cash and the equity part of the payment. Juanicipio is forecast to produce between 15 and 17 million ounces of silver in 2025 at an all-in sustaining cost of $6 to $8 per ounce, with Mag's share, 44% share there, being 6 to 7 million ounces. The acquisition also adds 58 million ounces of silver to Pan American's proven and probable reserves. Neil, the biggest silver company buying one of the best assets is perhaps no surprise. But the question is, why didn't Fresnillo buy it? And why didn't Pan American or Fresnillo look to buy Mag out long ago?
I mean, again, questions that are kind of impossible to answer in terms of having any kind of accurate reason. You really need to ask those companies directly, and they probably wouldn't even give you the answer anyway. I mean, Fresnillo is the obvious acquirer of I think it was 44% of the asset that they don't own, that's right next to, a big operating facility. Again, no idea why they didn't buy it. Maybe they always thought Mag was trading at a significant premium because of that, takeover forecast, takeover multiple, and maybe Fresnillo, maybe the board always thought the better use for our dollars is to put those dollars into, the 56% we own and the remainder of our assets, because they're currently undervalued by the market. So, it's sometimes the obvious acquisition doesn't always happen. Sometimes from a pure valuation point of view. I worked at Sprott for many years, and the brokers there, the guys were big Mag Silver shareholders basically from the discovery. Always believing that there's going to be the acquisition from Fresnillo, and here we are. It ended up being acquired by somebody else, which, even though it's a great asset, it is kind of surprising, because Pan American will go in there now as minority partner, and they're not actually operating the mine. So you often find mining companies don't really like being that minority partner when they don't have operatorship.
Now, following on from that, Neil, does this suggest that Pan American's Escobal silver project in Guatemala is not coming back online anytime soon? That's a big project. It operated for a couple of years before it got shut down for social, environmental reasons. The company's been trying to work through that to get it back online for a number of years, and well, so far that hasn't happened. Pan American also has the Navidad development project in Chubut in Argentina. That's a big project, but it doesn't look like that is going to get a permit anytime soon either. Can we read something into this, that seeing these two assets aren't going to come on stream or back into production anytime soon, the company's pivoted into another asset which, even though it's not the operator, will provide meaningful income?
I would guess they're two different sort of business streams inside the company. I think they will keep doing M&A as it comes along, irrespective of what happens with Escobal and Navidad. Now, those two assets are, great assets. Unfortunately, slightly challenging jurisdictions. I think if either of those assets were due to, were close to a breakthrough, we'd be hearing about it significantly from the company. And my take on those purchases were that, without, I was going to call them lottery tickets, but they're essentially options on, maybe one day there's a change of government there, something happens whereby they then become permittable, and Pan American Silver can reopen them. But I don't think they're sort of in their guidance for the remainder of the decade as to how much silver they're going to produce. But they are kind of nice options to have, just in case the political situation, the community relations, etc., improve around those two, tier 1, tier 2 silver assets, which are quite rare.
A nice bit of English understatement there, I think, Neil, about challenging jurisdictions. Now, the silver sector has seen several large acquisitions recently, including some of the most prospective mines in Mexico, such as Coal Mining buying Silvercrest for the Las Chispas mine in Sonora for $1.7 billion US dollars, and First Majestic Silver buying Gatos Silver for the Los Gatos mine in Chihuahua for $970 million, both of those last year. Neil, who's next? Who is the next best silver taxi on the rank?
Well, I'm not a big silver sector follower, but just reading the news over sort of recent months, the group's doing pretty well in the silver sector in terms of, drill results and resource growth. You have to put Vizsla Silver in there. And again, I'm not providing stock tips here. I'm just my own view of some of the better silver stories that are actually remaining as independent companies. I'd put Endeavour Silver in there too. Also focused in Mexico, staying in Mexico, which is a great silver jurisdiction, gold. And then maybe one a little bit obscure jurisdiction, but it's proven that it's one of the great silver belts of the world, is Aya in Morocco. Yeah, those sort of four companies would be the ones I'd name off the top of my head.
Excellent. Well, thank you for that insight. Not silver, but another M&A candidate is Snowline Gold, which issued an updated resource estimate for the Valley Gold deposit at its Rogue project in Yukon, Canada, showing a 96% increase in measured resources. The measured and indicated resources now total 204 million tonnes, grading 1.21 grams per tonne for 7.94 million ounces, with another 890,000 ounces in inferred resources. The company is working on a PEA, which it expects to be finalised in the coming weeks. Neil, this update perhaps didn't get as much as attention as I thought it would, given that it showed a transfer of inferred resources into the higher categories. Are people sort of waiting to see the PEA before they get excited again?
I suspect yes. As wearing my geologist hat, looking at the drill results there and the resource estimate, I think everybody realizes the continuity is excellent. So I don't think it's a surprise that A lot of the inferred is going to be upgraded to indicated. A lot of the indicated, will be upgraded to measured. I don't think that's a particular challenge given the amazing continuity. And I think the grade, if I remember rightly, the grade declined a little bit. So maybe people are getting slightly concerned as to what the ultimate grade of the reserve is going to be. I suspect the reserve grade will be a bit higher. But yeah, I would argue people are probably waiting for what the PA looks like. What sort of capex number you're going to have out there. How much more drilling is required maybe to upgrade this into a reserve. It shouldn't be that high because the continuity is excellent. So yeah, I would just say people probably are waiting, rather than jumping in now. They're probably just waiting to see some of the headline numbers from the PEA.
Now, Snowline's operating in Canada's Yukon territory. Has Victoria Gold's failure and Hecla Mining's struggles at Keno Hill, is that perhaps muted investor interest in Yukon and Yukon projects?
I suspect it will have, yeah, because there's other stories that have struggled recently, like Minto, and the old Wolverine mine. So recently there hasn't been any great, I'll call them mining successes in Yukon. I mean, Victoria Gold was a good mining success until obviously they had the heap leach slip. Now that's still up in the air as to what's ultimately going to happen there. So I'd say yes. I think the Yukon. One summary I came to a couple of years ago was that the Yukon is actually a great jurisdiction to explore. When it comes to mining, it's a little bit tougher because of the remoteness, because of the sort of the capex and the opex. There's only 50,000 people in the Yukon and probably not enough power to power a sizable mining project. So it's a great place to explore, not so good place to mine at the moment. I've often said it'd be great if somebody found a Norilsk or an Olympic Dam or a Witwatersrand in the Yukon, and then all the infrastructure would come, and then all the lesser projects would benefit from that. But as yet, nobody's found the sort of superstar, super tier one asset in the territory. But there's a lot of people looking, so hopefully we have some success in the next year or two that demonstrates there is a enormous tier one deposit there that will bring its own infrastructure.
Well, it's timely you mentioned power. Further south in British Columbia, Skeena Gold and Silver signed an interconnection and transmission agreement with Coast Mountain Hydro that allows its Eskay Creek project to connect to the transmission line. Neil, as you mentioned about when we're talking about Snowline, having power is critical. How important is this for Skeena?
Oh, it's hugely important. Now, I think if you looked at the power grid in the area, I think it was always that they were going to do this. It was going to happen. It was just a matter, obviously, you have to sign the contract. So it's great they've actually managed to sign it, and they've secured a power allocation essentially off the grid. And grid power in BC, the industrial rate is very cheap at let's say 10 Canadian cents per megawatt hour. So that's a great price for an industrial operation for sure. And anyone operating the Yukon realizes that power is a bit of a handicap in that jurisdiction. Whereas in BC, if you're reasonably close to the grid, then the power, same in Quebec, the power supply is excellent.
Well, having an extra power supply is one thing, but I think you mentioned the key word: getting access to that, getting allocation is the key, because the grid may pass by your project, but you can't always get allocation or the allocation you require. This is obviously a great de-risking step for Skeena and Eskay Creek. What else does the company need to be able to start construction at the project?
Well, I think two big headline aspects are, having all the permits just to be able to, do everything they want to do to basically produce the concentrate and, truck the concentrate to a port and sell it. And I believe they don't yet have a concentrate offtake agreement signed, and that's kind of a key point that a lot of people are looking at, because Skeena's advising that they'll be able to sell the concentrates, and that's all well and good, but so far we haven't seen we haven't had news that they've signed a contract with an offtaker. And normally the terms of those offtake contracts are confidential, but we should get some indication as to what the payables will be, what the penalties will be, and obviously that is important financial information that feeds into the economic model.
Okay. Now, Skeena and Snowline are both legitimate M&A targets, and the takeaway of the level of interest from the Newmont asset sale last year is that perhaps buyers want fully de-risked, i.e. producing assets. Perhaps one reason for wanting fully de-risked assets is the idiom, it's not done until it's done. And we can see that in the 2021 acquisition by Dundee Precious Metals of INV Metals for the Loma Larga Gold Project in Ecuador, where the government has now completed a prior consultation process with the local community. The project now just needs to be awarded its environmental license to be able to start construction, and construction could start before the end of the year. It's taken Dundee, 4 years to get to this stage after buying the project. Dundee is looking to produce about 200,000 ounces a year of gold equivalent during the first 5 years, and an updated feasibility study on the project is due in the June quarter. Neil, this begs the question, will Snowline and Skeena have to put their projects into production in order to find a buyer?
Not necessarily. Buyers are driven by different triggers, let's say. Obviously, Great Bear Resources got taken out, didn't even have a resource estimate. So it's not, sometimes you have to wait until things are in production until they get taken out. I think a key thing maybe with both assets is permitting. Because the companies themselves, the potential acquirers are obviously mining companies, that they've got technical teams who understand what a mine looks like, what they need to do to put a project into production. The whole permitting regime, you can learn about it, but often those relationships between the company representatives and the people who are providing the permits are actually quite crucial quite often. And quite often you can't just sort of step in there and assume you're sort of best buddies with the regulators you're hoping are going to give you the permits. So sometimes you might be better just waiting until both projects or one or both projects are absolutely completely permitted, and then at that point that might be the trigger for the acquisition attempts from obviously the companies that want to bid for one or both assets.
Okay. Let's talk money. Endeavour Mining refinanced $500 million US dollars of 5% senior notes due 2026 by offering $500 million of senior notes due 2030. The coupon's yet to be determined. Solaris Resources entered into a $200 million US dollar financing agreement comprising a gold stream and net smelter return royalty with Royal Gold to fund further de-risking activities at its Warintza copper gold project in Ecuador through to a final investment decision. And it also enables the company to repay a senior secured debt facility with Orion Mine Finance. Royal Gold will receive gold deliveries equivalent to 20 ounces per 1 million pounds of copper produced, paying 20% of spot price until 90,000 ounces have been delivered and 60% of spot price thereafter. The stream can be terminated without penalty under a change of control of Solaris. The 0.3% NSR, that will increase annually up to a maximum of 0.6% until the earlier of first delivery of gold under the stream, or 8 years following the closing date. Solaris plans to publish a pre-feasibility study in the third quarter, and it expects a technical review of the project's environmental impact assessment to be completed mid-year, with all project exploitation permits expected by mid-year 2026. A bit of a mouthful there. Neil, being financed to an investment decision is great for Solaris, but will putting a royalty and stream, however modest, will that be a deal blocker for anybody that's potentially interested in acquiring the asset?
I don't think it'd be a deal blocker. It's a minor negative. You'll just put it in your financial model and it'll shave the future cash flows. Now, something that sort of I find slightly annoying is, you'll hear the companies and maybe some analysts will say, oh, they've done this royalty and stream deal, it's not dilutive. Of course it's dilutive. It's dilutive against future cash flow. It's not just dilutive against equity today. So it is dilutive. I think it's probably wise for the issuer, for Solaris, to sort of put this in now, because they're not having to issue any more shares. It's kind of a dilution that they've kicked down the road. It's probably someone else's dilution. It's someone else's problem. So I think it's actually a smart deal for Solaris to do. But it certainly is dilutive. But to answer your question, I don't think it's a poison pill or anything like that for a future acquirer.
And the stream, of course, as mentioned, can be bought back upon change of control. Now, I moderated a copper panel at the SME New York Current Trends in Mining Finance Conference in New York this week. And one of the items discussed was that major copper companies are not buying development assets. With one or two exceptions, they're preferring to expand existing assets. So for Solaris, does this mean that the only way is China in terms of finding a buyer?
Not necessarily, but I agree. I'd not thought of, there's not that many copper acquisitions lately. The thinking off the cuff, BHP buying Oz Minerals, then BHP and Lundin taking out Filo and obviously rolling Jose Maria into that. Apart from that, it is kind of slim pickings, and there are lots of big development projects out there that the owners probably, when you speak to them, and you have a couple of pints with them, they probably will tell you they have no intention of building this. Yeah, so it's like, who are the acquirers? Where a Freeport here, where Barrick's talked about growing in copper. There's plenty of big copper boys out there, your Antofagastas and the Valley Base Metals. But I agree, we're not seeing the acquisitions. Maybe that's because the capex bills on these things are enormous. Multi-billion-dollar capex is at most of the deposits you see these days. I saw a list recently. I think it was the 20 largest undeveloped copper projects in the world, and the grades were 0.3 to 0.5 in reasonably remote locations. They're going to require billions of dollars, and maybe we need copper to actually have a jump to say $5 or $6 a pound and stay there before we see some acquisitions of some of these juniors, which are sitting on enormous reservoirs, let's call them, enormous inventories of billions and billions of pounds of in situ copper.
Now, all of those big copper companies you mentioned, Neil, they've pretty much all got large expansion or growth projects on their books or underway at the moment. So a lot of capex going into those.
Right.
And I agree, it's tough to pay perhaps a premium for a junior and then have to invest multi-billions of dollars to build it as well. One copper junior that a major may buy in the future, however, is perhaps NGEx or NGEx Minerals, which announced the discovery of a new copper gold porphyry system at its Lunahuasi copper gold silver project in San Juan in Argentina. The discovery hole there returned 1,619 meters, grading 0.87% copper equivalent, including 876 meters, grading 1.13% copper equivalent. The company said this demonstrates that the Lunahuasi system has similar size and scale potential to other deposits in the Vicuña cluster, such as those that BHP and Lundin Mining are looking to develop. Neil, Lunahuasi looks like it has monster potential, and as CEO Wojciech Wojcicki told me recently, it is a freak of nature.
Yeah, amazing. I mean, you can't argue against those drill holes as being, some of the best, drilled in the last decade. Again, though, you could argue BHP's been the only sort of reasonably aggressive acquirer in copper in the last few years. They may argue they're actually pretty full right now with the sort of two acquisitions they're probably still digesting, and Filo is going to require a huge amount of capital and a lot of technical competence. So who's left? Who would be able to take on a project like that? Back in the day, maybe Newcrest was a big block caver. I mean, Rio Tinto too, but maybe Rio's full up trying to get Oyu Tolgoi working to its full capacity. Newcrest has gone in Newmont. Newmont's pretty full now. It's got lots of. We're going to see, as you mentioned before, about a Chinese group. Are we going to see more Chinese acquisitions of these copper assets? But they are significant acquisitions, and there will be enormous capexes. Capex outlays and technically complicated projects. So it's not for the faint-hearted. Amazing drill results. As a geologist, I look at that and it's like, it does make me go, wow. But actually building a mine in those locations and the amount of capital required and the very long payback, it is going to be quite an endeavor for whoever takes NGEx's project on.
I imagine when a capex figure is put out, it'll be another moment to go, wow.
Oh yeah, it will. Probably double-digit billion. Yeah.
Okay. Perhaps another reason that majors are holding back on buying juniors is the potential of new leach technologies, which, if successful, could transform waste material into ore, unlocking billions of tons of new resources of stuff that's already been mined and is sitting in stockpiles around the world. Rio Tinto is testing its Newton technology with various juniors and getting some success. Regulus Resources reported this week that phase 2 metallurgical testing with Newton bioleaching technology returned attractive copper extraction rates at the integrated Coimolache sulfide Antiquary copper gold project in Cajamarca in Peru. Of particular interest is its use with the enegite-rich high sulfidation mineralization that makes up the bulk of the antiquarian mineralization. The highest copper extraction rates for the enegite-rich materials was just over 88%, and the highest extraction to date for the porphyry-hosted chalcopyrite mineralization is almost 88% as well. Neil, how revolutionary will these leach technologies be if they can be widely deployed?
I'm not inside the tent at Newton or Rio Tinto or even the juniors, close to what's really going on here with the sort of chemistry and the test work. But Rio, give them their credit here with Newton, that they basically have 5 or 6, real world scale experiments ongoing, and I think they are going to learn a lot from these activities. I do believe there will be incremental improvements in recovery, probably of stuff which they were going to process anyway. I believe one design of Newton is to process quite low grade chalcopyrite bearing waste dumps, let's say, so they could recover more copper out of them. But I think the angle with the sort of energite ores is an important one, because there is an increasing amount of arsenic in some of the copper concentrates of the world, and obviously the arsenic is a penalty element, so it kind of hits the bottom line. So if you can actually leach that, leave the arsenic at the mine site, and be able to sell a cleaner copper product, or even take it all the way to copper cathode, and you're not having to pay those penalty elements, that's potentially a huge win for the copper producers. So even if Newton is moderately successful, and there are quite a few of these copper leaching technologies underway, I think Jetty has one, which is a US-based company. It's great to see this metallurgical test work underway. I don't think we're going to see anything that's revolutionary. I think we will see lots of little incremental improvements.
Okay, enegite, that's a arsenic-rich copper sulfide.
Yeah.
We've got that right? Okay.
Yeah.
And as you mentioned there, pretty much every major copper company's got its own version of this under test work. Glencore's got one underway. Jetty, you mentioned. Freeport is already producing, I think, 200 million pounds a year of copper from their technology, and they're forecasting or projecting that that's going to go up to, I think, around 800 million tons per year of production, if my memory serves me correctly. Now, Neil, we've almost made it through an episode without using the T name, but we couldn't get away because you sent me something last night. As overnight media sources stated that US President Donald Trump will sign executive orders that aim to jumpstart the local nuclear energy industry by easing the regulatory process on approvals for new reactors and strengthening fuel supply chains. This hasn't yet been finalized, and the executive order hasn't come out, but there's obviously a lot of speculation that this is coming. Neil, what are the implications of this?
Well, it has to, even just the headlines, irrespective of what it means, tomorrow for the supply and demand of nuclear fuel and uranium. I think the headlines are going to be very positive for the nuclear sector. Obviously, very positive for anything related to uranium. So I suspect it's going to give a nice shot in the arm for any juniors, any producers of uranium, like a group that are talking about developing the small modular reactors. It should be great for anyone that owns any nuclear fuel, nuclear power related equities.
Okay, and finally, credit rating agency Moody's downgraded the US credit rating by 1 notch from AA1 to AAA, citing rising interest rate costs and unsustainable debt growth. But it also revised its outlook on the US to stable from negative. Neil, what implications will this have? Will this make debt for companies looking to build in the US more expensive?
Maybe slightly across the board. I think ultimately the cost of debt is determined by the quality of the project and the sort of riskiness of the jurisdiction. I think quality projects in good jurisdictions are always going to get a very attractive cost of capital. It may make rates go up slightly, but I think ultimately I don't think it'll make a huge amount of difference.
Okay, fair enough. Neil Adshead, thank you very much for joining us today.
No problem. Thank you, Paul. Always a pleasure. Till next time.
Thank you. And of course, if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.